Gold rose and then crashed last week. It blasted through $5,500 US per ounce for the first time and then slumped on Friday. Our guest says, dropping below 5,000 on the way down may not be as big of a deal as it was going up through that level. However, it was all of this happened in a single week, and that short, compressed time frame is important. We're joined by Christopher Louney, natural gas and gold strategist at RBC Capital Markets. Christopher, thanks very much indeed for joining us. Really appreciate it.
Yeah, thank you for having me back.
What do you think? I mean, it's multiple reasons, of course, could have been and were at play. But why do you think gold really crashed on Friday?
Part of it is just the momentum of gold's rally. Anything that is moving that quickly, that much higher, is prone to some sort of retrenchment. And we saw that correction unfold in gold. There was a trigger, obviously, the announcement of Warsh as the nominee for Fed chair, and sort of the consequence that we saw play out in the dollar, where a lot of the dollar weakness we saw reverse, particularly in a short amount of time. I think a lot of the sentiment that had been driving gold were linked both to uncertainty and the dollar weakness. And so seeing that change sort of suddenly really unleashed a lot of this move lower. And again, I think this is probably a healthy correction for the gold market and could give it room for a more measured pace from here.
Your take is that despite this sell-off, and I know it's such a fast-moving thing, but a couple of days ago, your take was...
it was a busy week.
Yeah, that gold, there's a real chance it grinds higher from here, despite the selling.
Yeah, so if going through our research over the course of last week, earlier in the week we did not change our view. Our longstanding view has that gold should spend most of its time in the $4,500 to $5,000 per ounce range in 2026, and probably finish on the higher end. We had 52.03 as our Q4 average. That view didn't change, but what we had been citing earlier in the week was that if we saw, and there was certainly potential, and we still can't write off it now, if we saw 2025 type price gains, that could lead to prices around 7,100. And so while that is by no means our base case, it remains a possibility that we cannot write off in the gold market, because what underpins the move and what has underpinned the move in 2025 and now into 2026 largely remains intact. There's a lot of uncertainty in the market. Investors are looking for a hedge to a lot of this uncertainty. You see central banks piling in, and you generally have a gold positive macro backdrop. And none of those things are really disrupted coming into 2026. And even over the course of the last week, despite the volatility, a lot of these themes remain in place. So that view that we had at the start of the year remains intact. And I think wherever we settle as this correction continues to unfold, is certainly possibly an entry point, as gold will probably grind higher. And again, we still think that gold will remain mostly in that $4,500 to $5,000 per ounce range, and can potentially finish higher than that using our Q4 high as a benchmark over 5,200. So there's room for gold to run, I think, and there's room for this sort of grind to resume, again, because those major factors that drove gold are still intact.
Right. It sounds like you're not calling, though, in the near term for 5,500 yet again.
No. I do think, this is potentially the starting point, again, where we settle from this correction, leaves room for a grind higher. What we learned over the course of 2025 and obviously in 2026 to date is that there can be numerous sources of uncertainty. And so we can't write off a rally. We can't write off a move higher on the back of that uncertainty. But we're not expecting a move last week, like this week or in future weeks like we saw last week.
What about silver? Silver, of course, has outpaced gold big time over the past year. Is it? I mean, it's a much smaller market, potentially much more volatile. And it's been sliding. What's your feeling on silver?
So you've seen what happened in gold also happen across metals markets. Silver was by no means immune. It benefits from a different type of story in addition to the uncertainty and the sort of what I view as the gold positive macro backdrop as well, which saw it hit its own highs and then move lower. But like gold, and in particularly in how we're thinking about gold in this world, I think uncertainty is certainly something that factors into flows across precious metals broadly. It's something that they both share. And looking towards gold and across the broader metals complex, I think there are reasons to view this correction as probably a healthy move broadly.
Yeah. And I see people, I mean, silver, wow, I didn't realize it was down that much, 26% on Friday.
Yes.
And apparently some of it was the old speculative money from China. Christopher, thank you very much. Really appreciate it.
Thank you for having me.
Christopher Louney, natural gas and gold strategist at RBC Capital Markets.